president of Universal Accounting Center. I'm excited to discuss with you something that's come up in conversations recently about the difference between dashboarding and benchmarking. Now, this is perhaps something that's new to you in the accounting profession, or maybe this is something you've experienced before. But let's just discuss real quickly what the difference between those two items are, and perhaps help you in your career as you're either working with an employer or client as they're using those tools, or perhaps introducing them to them so that they can actually better utilize the information that they're gathering. So first of all, dashboarding. Essentially, consider it this: when you're driving a car, one good analogy is basically the dashboard you're using in your vehicle to keep track of maybe the miles per hour that you're going, the oil, the temperature of the engine, the gas gauge. These are critical things that you're watching on a regular basis. You're obviously looking at the speedometer quite often. The fuel gauge, you keep a regular assessment of how that's progressing as the week goes on and such. So the dashboard is, I think, a very common thing that people are familiar with, because in business, the way a dashboard is typically used is metrics are identified, specific things that need to be measured on a frequent basis. Now, these could be real time, they could be hourly metrics, they could be daily metrics, but a dashboard is generally a visual tool that's used traditionally on a computer, obviously, that is actually watched or monitored by managers or business owners to assess how the business is doing. Are there things that need attention? Are there things that need to be helped or assisted along? And because of the dashboard, things are brought to attention very quickly when they're out of sync. Now, obviously, you can look at the positive and reward those things that are coming along, but more importantly, they're meant to assess how the business is going on a regular basis, whether it be real-time, daily, weekly, and so forth. This differs from from benchmarking, which BizBench actually is something I'll mention here in a moment, but it differs from benchmarking in the sense that benchmarking is traditionally something that's done less frequently. More often, it's maybe just a yearly event. But benchmarking is something that you need to be familiar with and use. What it basically consists of is this. Imagine as an accountant, you're going through and you're preparing financials, balance sheets, income statements. And as these reports are compiled, we're able to assess the profitability, the efficiency of the business as its own, or on its own. You're looking at current ratios, liquidity ratios, and these are basically indicators to know the strength of a business. And you can, through trending, look back and see fourth quarter to fourth quarter of the previous year, fourth quarter to third quarter of the same year, July to June, and you can do these comparisons and see what's going on within the business, but you're always comparing it to itself, or you're just using standard accounting procedures to say the current ratio is 2.1 or 2 to 1. And that's good, but what we want to know in benchmarking is how does that business, that individual entity, how does it compare to the industry standard of which it's a part of? And what we want to do in benchmarking is understand what's the standard in that industry and how the company compares. Now, I gave an example just a moment ago of 2.1 is the current ratio. From an accounting perspective, that's possibly very good for that business. It may be excellent for the business. In the past, you may be able to see a history of 1.7, 1.9, 2.1, and so here you are with that trending. But how does it again compare to the standard for the industry? Well, in the industry, what we want to do is take and based on NAICS codes, or formerly you may know them as SIC codes, what you're doing is you're comparing based on that tax identification number that you're using when filing tax returns. You're comparing now that business to that industry that you're saying it's a part of. Now, when you get that comparison, that 2.1 that I've just been speaking of here for conversational purposes becomes more relevant, because not only is it just an accounting number and you're able to say the current ratio is 2 to 1, but you're now able to say that in the industry, most of the other businesses in this industry, your competitors down the street, what they are is they're at 1.8. Well, you have something now to actually draw to the attention of the employer or the client and simply point out that we're at 2.1. And yes, in our past, we've been between 1.7, 1.8, 2.1. 2.1, we have something to be proud of. But now look at the standard for the industry. In this example that I'm sharing, the industry standard was 1.8. Well, you have something really now to be comparing it to, because it's now what that industry expects. Now, I share this with you because benchmarking is a powerful tool that in accounting we should be using more frequently. And those of us within business, such as CFOs, controllers, accounting managers, this is something that can really empower us to give us actionable items that we can use in business to turn things around, take a more passionate role in the companies that we're a part of. But also when we're accountants, CPAs, bookkeepers, tax preparers, and we have clients, this is a powerful tool that you can use, especially on a yearly basis, to help educate your clients as to what it is they're doing right and where it is that they can improve. Now, I alluded to earlier, I slipped and I said BizBench. BizBench is just that. It's one report that is specifically designed to benchmark any business to its NAICS code. And by doing so, not only just generate a report of comparison, but based on that report, also provide actionable items, things that can or should be done in that business in the coming year to bring it more in line with and better than the standards within that industry. This is powerful. With BizBench, what you're able to do is generate 2 reports, and these 2 reports are very simple. One's a summary report that is generally given to the employer or the client, something that they can look at. It's not overwhelming, it's got some bars and graphs to help illustrate some things, but it provides an executive summary, what's going well in the business, and opportunities, areas of improvement that they need to actually look at or consider. Now, these again are being identified by looking at the standards for that industry, and so they're very relevant. But more important than this is what you receive as a detailed report. As the accountant, the CPA, as the CFO, as the controller, what you're receiving is a detailed report. And in this detailed report, it breaks down all the ratios, the operations ratios, the efficiency ratios, the current ratios. And all of these ratios, it defines, it explains, it gives you an understanding of how you compare to the industry. Are you in the 90th percentile or the 30th percentile of the industry? And those that are deficient, those where you have areas to improve, it provides also action items. Lists and lists of specific things that you can or should be doing in the business to turn it around or improve it. Now, as a consultant, an accountant, CPA, someone that's working with clients, this gives you things that you can take to them as to what they should be working on. But as a CFO, a controller, what you're now doing is it's giving you specific things that you should be emphasizing or working within the client or within the company. Now, one thing I do want to stress here is this lengthy list of actionable items. You get to look through it, you get to identify and prioritize, but more importantly, once you go into the business and maybe act on, say, 3 for the first quarter, now when those have been either improved or taken care of, you still have a list now of what are those things you're going to do in the second quarter, the third quarter. And the beauty of the report is now a year later, you can easily run the report, ping everything that you have now in the next year against, again, that same standard for the industry and see what has changed, improved. And for those of us that are wanting to obviously draw attention to the fact of here's what we were able to do in the past year and show what it is that you've helped improve and better. BizBench is a powerful tool. It allows you to take and implement this idea of benchmarking, and I encourage you to take advantage of it. What I would suggest that you do is look a little bit more in detail as to what BizBench can do. Take a moment and look at the components of the report, the details that are available to you, not just in the summary, but also in the detailed report that you can utilize to become just what you need to be, which is a profit and growth expert. So with this, let me just end by saying, remember this, if it's about accounting, it is universal. Have a great day, and thanks.